Did you know that right now, there are companies allowed to create and destroy millions of shares every day without actually owning them? While you need cash to buy a single share, they can create thousands of shares from thin air, sell them to you, then destroy them seconds later for profit. Sounds like fraud? But no, this is completely legal. They're called market makers, the silent controllers of the stock market that 90% of investors have no idea even exist. Today, I'm going to expose how these market creators operate. The ones who have turned the stock market into a massive casino where they're always the house, and you're just the gambler. Have you ever wondered why when you place an order to buy a stock, almost instantly someone sells it to you? Or why when you want to sell, there's always someone ready to buy? You think that's the natural liquidity of the market? Wrong. That's because there are manipulators standing in the middle, controlling every one of your trades. They decide the price you buy at, the price you sell at, and of course, they always profit from each transaction. While you lose sleep worrying about your investment portfolio, they sleep soundly knowing that whether the market goes up or down, they still make money. That's the difference between gambling and being the house. After reading this, you'll understand who really controls the stock prices you buy and sell, how they make billions of dollars from retail investors' pockets, why high-frequency trading algorithms always beat you, and how not to get blood sucked by this system. I'll reveal the secrets that Wall Street never wants you to know, truths that will completely change how you view the stock market. Market makers, or market creators, sounds nice, doesn't it? They create liquidity for the market, helping you buy and sell stocks easily. At least that's how they advertise themselves. What's the reality? They are entities with special licenses to create shares from thin air, sell them to you, then find ways to cover later. Sound familiar? That's right, exactly like how banks create money to lend to you. Imagine playing poker with someone who's allowed to create cards whenever they want. They can create an ace, put it on the table, then destroy it later if needed. Do you think you can beat them? Market makers have privileges that you, an ordinary investor, will never have. While you have to borrow shares to short sell and pay fees, they can create shares to sell even when no one is lending. They call this naked short selling. They can see all your orders before they're executed. Imagine playing cards where your opponent sees your hand before you play. When the market drops sharply, there are rules prohibiting short selling to prevent market collapse. But market makers are exempt from these rules. They can short sell whenever they want. Through adjusting bid-ask spreads, they can push prices up and down at will. Market makers make money through an unbeatable model. They set the buy price, bid, and sell price ask for each stock. When you buy at the higher ask price. When you sell at the lower bid price. They profit from this difference. Sounds simple? But when multiplied by billions of transactions daily, the profit is enormous. And the most terrifying part, they profit regardless of whether the market goes up or down. Every time you buy or sell stocks, you pay a hidden tax to market makers through the bid-ask spread. This is the difference between the highest buy price and lowest sell price. For example, stock ABC has a bid of $100 and ask of $150. When you buy, you pay $100.50. When you sell immediately, you only get $100. You just lost 50 cents for doing nothing. What's the big deal? Just 50 cents, you think? Let's recalculate. If you trade $100,000, you lose $500 in spread. If you trade 10 times a month, you lose $5,000. A year is $60,000 just from spread. And this is calculated with a 0.5% spread. With some illiquid stocks, spreads can reach 2 to 3%. You could lose hundreds of thousands of dollars a year just from this hidden tax. You think spreads are determined by the free market? Wrong. Market makers decide the spreads. They can make spreads wide or narrow according to their interests. When they want to make more money, they widen the spread. When they want to attract trading, they narrow the spread. When they want to punish a group of investors, they suddenly widen the spread. They can manipulate spreads in real time based on complex algorithms analyzing your trading behavior. They know when you're panicking, when you're greedy, and adjust spreads to blood suck optimally. On trading platforms, you only see the current bid and ask prices, but you don't know whether this spread is high or low compared to normal, how they just adjusted the spread, or whether your spread differs from others. That's right, market makers can give you different spreads than other investors based on your profile. If they classify you as easy prey, you'll get worse spreads. While you think for minutes before placing an order, market makers' computers have executed thousands of trades. This is high-frequency trading, HFT, the ultimate weapon in their arsenal. HFT operates at microsecond speeds, 1/1,000,000th of a second. To give you perspective, in the time you blink once, they could execute 300,000 trades. They place servers right next to exchange servers to reduce latency to just a few microseconds. They're willing to pay millions of dollars just to be a few microseconds faster than competitors. Here's how they use HFT to steal your profits. You place an order to buy 1,000 shares of ABC at $100. Their algorithm detects this large order. Within microseconds, they buy up all ABC shares at $100. They sell back to you at $100.20. You buy at 20 cents more per share, totaling $200 more. The terrifying thing is, this all happens in milliseconds. You never realize it. You just see the price naturally increase and think it's due to market supply and demand. Market makers use HFT to profit from the smallest price differences between exchanges. When ABC stock on exchange A costs $100, but on exchange B costs $100.10, they'll buy on exchange A and sell on exchange B, profiting 10 cents per share. Sounds small, but when done with millions of shares daily, the profit is enormous. And most importantly, this is risk-free profit because transactions happen simultaneously. This is one of the legal but extremely dirty tactics they use. Place thousands of fake buy orders at high prices, creating the illusion of large demand and pushing prices up. When prices rise, sell at high prices, cancel all fake buy orders. Prices collapse, retail investors lose. All happens within seconds. You just see prices suddenly rise then fall, not knowing you've been deceived. Price discovery, the process of discovering an asset's true price, is supposedly the market's most important function. Theory says that through free trading, markets will find fair prices reflecting companies' true values. But when market makers control most trading, prices no longer reflect true value. Prices only reflect what market makers want them to reflect. They can push prices up to create FOMO, making you buy at high prices. Then they push prices down to create panic, forcing you to sell at low prices. This entire process happens without any information about the company changing. You often hear trading volume surged as a positive sign. Be careful. Most current trading volume is fake volume created by market makers. They can trade back and forth with each other thousands of times to create the impression of a hot market. In reality, no real investors are participating. This is how they trick you into thinking many people are interested in this stock. This is an extremely vicious tactic. Market makers send thousands of fake buy-sell orders every second, then cancel them immediately. The purpose is to overload other investors' systems, preventing them from trading timely. While your system is lagging from too much information, their system runs smoothly and can exploit the price movements they create. Market makers also operate dark pools, secret trading venues that the public cannot access. This is where they execute large trades without revealing information. They can buy and sell millions of shares in dark pools without you knowing. When they want, they'll bring these trades to the public market to create unexpected price shocks. This system creates two markets, one for insiders and one for outsiders like you. Propaganda about free markets has brainwashed you into believing stock prices are determined by natural supply and demand. The truth is, markets are tightly controlled by a small group of massive market makers. Only about 10 to 15 large market maker companies control most global trading. They can coordinate with each other legally to adjust prices in their favor. You think markets have good liquidity because you can always buy and sell? That's just an illusion. This liquidity is created by market makers and they can withdraw at any time. During crisis times, when you most need to sell urgently, they can disappear from the market. Suddenly, no one buys your stocks or only buys at extremely low prices. This happened during the 2008 crisis and repeated during COVID in 2020. When you need liquidity most, it vanishes. Market makers have interests in increasing market volatility. High volatility means wider spreads, which means higher profits for them. They can create artificial volatility by suddenly withdrawing liquidity, creating fake flash crashes, triggering mass stop losses, and creating fake rallies to attract buyers. Every time volatility increases, you lose more while they gain more. You and other retail investors are considered prey that needs nurturing by market makers. They need you participating in markets to have prey to hunt. That's why there's so much free investment education content, easy-to-use trading apps, and success stories widely promoted, all aimed at drawing more prey into the system. They even have departments specifically studying retail investor psychology to know how to exploit most effectively. Remember the GameStop, AMC, and other meme stock stories? This is a perfect example of how market makers exploit both sides of the market. They massively short sell into dying stocks. When retail investors accumulate shares to fight short sellers, they let prices rise. At peak prices, they cover short positions with small losses, simultaneously create millions of new shares to sell to retail. When retail runs out of money, they push prices down and make enormous profits. Result, retail investors think they beat Wall Street, but actually got played by market makers. Flash crashes, when markets suddenly drop sharply, then recover within minutes, aren't technical glitches as they claim. These are deliberate tactics by market makers. They create flash crashes to trigger mass stop-loss orders, buy in at extremely cheap prices, and sell back at high prices when markets recover. All happens within minutes, but profits can reach billions of dollars. Earnings season is market makers' favorite hunting season. They can control market reactions to news regardless of whether it's positive or negative. Even when a company reports earnings beating expectations, stock prices might fall because market makers decide to sell the news. Conversely, bad news might cause prices to rise because they decide to buy the news. You can't predict market reactions based on news because market makers are the ones deciding those reactions. The first thing you need to do is stop believing traditional investment theories. Markets don't operate by logic, but by market makers' interests. Instead of fundamental or technical analysis, learn to read market makers' behavior. Observe bid-ask spreads, volume patterns, and timing of large trades. Don't day trade because you can't beat computers trading at microsecond speeds. Every short-term trade, you're giving money to market makers. Avoid market orders and always use limit orders to avoid slippage caused by market makers. Don't chase momentum because when you see prices breaking out, that's usually when market makers are baiting you. Avoid illiquid stocks because these are market makers' favorite playgrounds where they can manipulate prices more easily. Instead of trying to beat the market, learn to coexist with market makers. Find opportunities they don't care about or can't manipulate. Long-term invest in companies with real value because market makers can manipulate short-term prices but struggle to manipulate long-term value. Dollar cost average over time to avoid being timed wrong. Don't just diversify assets, but also diversify trading times to avoid being targeted by market makers. Instead of playing by the system's rules, create your own rules. Invest in real assets like real estate, gold, actual businesses that market makers can't create from nothing. Learn skills to create passive income. Instead of gambling in markets, create stable cash flows from other sources. Build networks and connect with people who understand the system for better information. Now you understand who really controls the stock market. Not famous CEOs, not large investment funds, but silent market makers, those allowed to create and destroy shares at will. They've turned the stock market into a sophisticated blood-sucking system where every trade you make profits them. Bid-ask spreads, HFT, price manipulation, all just tools to transfer money from your pocket to theirs. The painful truth is, the stock market wasn't designed for you to get rich. It was designed to enrich market makers. You're just liquidity, the money source for their profits. What you just read isn't conspiracy theory. These are truths documented by financial regulatory agencies themselves, but packaged in complex terminology so ordinary people don't understand. They don't want you to know because when you understand, you won't be easy prey anymore. You won't trade constantly, won't chase momentum, won't panic sell, all behaviors that bring enormous profits to them. This system can only exist when most people don't understand how it operates. That's why the financial education they provide always focuses on technical analysis and fundamental analysis, things completely useless in a manipulated market. If you still want to participate in stock markets, remember, you're entering a casino, not an investment market. Treat it like entertainment. Only bet money you can afford to lose. Don't trust investment gurus. Most are just salespeople for the system whose job is pulling you into this casino. Focus on creating real value. Instead of investing in markets, invest in yourself, skills, and real assets that can't be created from nothing. Understand the rules before playing. If you don't understand how market makers profit from you, you are the product being sold. Today, you've awakened to a truth that 90% of investors have no idea about. You understand who really controls markets and how they profit from every trade you make. But knowledge only has value when shared. If you found this article useful, share it to help awaken more people. Don't let market makers continue blood-sucking the uninformed. Market makers can control prices, but they can't control knowledge. And knowledge is the most powerful weapon against this unfair system. In a world full of deception, speaking truth is a revolutionary act. Now you're equipped with knowledge. Use it wisely to protect yourself and loved ones from this blood-sucking machine.